Hey guys, Ken Calcutt here with Cornerstone Financial Management. Hope you're having a good summer so far. It is June 9th. Wanted to give you a quick update on what's going on with the markets. This should be a short update. What we've got on the board here is a typical chart that we look at. I've got it scaled where you're looking at 2025 year to date. Okay, so what you can tell here, where we started January 1st, we peaked in mid-February. We had this low point in early April. And now we're basically back to slightly above where we started the year. The S&P's up roughly 2% for the year after being down nearly 20% in April. So we've had this huge recovery back to where we started the year. The markets are starting to feel like maybe the tariff effect isn't going to be that bad. Maybe recession is not coming. The market is kind of pricing in an expected modest tariff rate that the economy can handle that's not going to be devastating. If that changes, if we end up with substantially higher tariffs, then this will probably come back down. If we do see more trade deals starting to get announced, things get worked out with China, other countries, we'll probably continue to see this climbing. But there's a lot of variables, a lot of factors that we're always looking at that could move this. The unemployment rate is very important. Interest rates from the Fed, very important. Jobs reports, always very important. GDP reports, very important. So all of these little components put together right now look pretty good, but any of them could change at any time in the future. So we're looking at this now, and it's important. What I want to do today real quick, I want to scale back because we spent a lot of time looking at these, what I call short-term movements. This is only 5 months of trading. This is not a long-term pattern at all. This is short-term and a lot of chaos. But if we scale back and look at the long-term, I think that's important sometimes. So bear with me while I scale back here. Okay, so I've scaled the chart back a little bit to give us more time to look at. This is going back nearly 30 years. All right, we're going back into the mid-90s here. But the reason I do this is important sometimes to step back and look at the big picture and don't get too bogged down in the short-term volatility that we see. Because way up here, this tiny little movement on the big screen is all of the chaos we've been dealing with this year. It seems crazy, but in the big scheme of things, really not that big a deal. When you look back, this was the tech bubble, early 2000s, 2000, 2001, 2002. We had basically 3 years of market decline. Then we had the financial crash. Then we had COVID right here, and now we're having this tariff mess up here. There's always a reason for the market to be volatile, always, and there always will be. But what I want people to see is this black line I've drawn kind of in the middle. I think the market generally wants to follow that line. All right, there are times where it gets too high. This was the tech bubble and then the crash. There's times where it gets too low, the financial crash and then the recovery. But generally, if the market gets too far away from this midline, it generally wants to come back to that midline. So anytime we see crazy volatility, we can almost have peace of mind to believe it's probably going to move back to the midline at some point. So now I'm going to zoom back into the short term and see where we're at relative to this. Okay, so I've zoomed back in a little bit here, and we can see this year's volatility. It's been pretty crazy in the short term, but in the context of this longer term trend line, I still think we're going to generally follow this line over the next 5, 10, 20 years. So it's important to remember that because the chaos here can make us feel like the world's coming to an end, the stock market's never going to recover. Historically, that's never been true. It may be true one day in the future, but so far it hasn't been true. It always has recovered. I tend to believe it always will recover when we go through these volatile times. So when we look at the long term, I can say, we're probably going to be way up here over the next several months, several years. I don't know what path we're going to take to get there, but we're probably going to be somewhere up here. And so it gives us a little peace of mind to know the volatility can be painful, but the long-term trend generally is to the up and to the right. And that's what we're looking for, really. Long-term investors should not panic over this short-term stuff. We've already made it back to where we started the year. I don't know where it goes from here, but over the next several years, I'm confident we're probably going to move in this direction. So something to keep in mind where you can just not be as nervous when the markets get this volatile. Long-term, it tends to work out. We just have a lot of uncertainty right now that will get worked out, and we'll know eventually how this settles out. But for right now, nothing to panic about. Just sit tight, let the markets do their thing, and everything's looking okay. As always, if you have any questions, reach out to us anytime. Thank you.